Good everyone, welcome back to our next edition of Econ Talks. Gareth, we've seen the last couple of days some huge market turmoil after US President Donald Trump came out with his Liberation Day tariffs. They've certainly liberated the markets from any gains that they've had in recent times. Over the 2 days that the tariffs were out, you saw something like 6.5 trillion US wiped off the markets. The biggest 2 day plunge, or the fourth largest 2 day plunge ever. The only bigger ones being COVID-19, the global financial crisis, and then back into the Great Depression and the falls on the stock market at that point. I mean, it has been a bit of a bloodbath. It highlights that the markets were not ready for the announcement of 10% tariffs on everyone, every country in the world, except for Russia, interestingly. But also higher tariffs of up to 50% on another 60 or so countries. Much broader, much deeper, much of a harder hit now coming through and being priced into those market expectations. We know that for New Zealand, we've only been hit with that 10% tariff. We weren't necessarily singled out for it, which is encouraging, but that's basically where the good news ends. Still a real wild view of what does this mean for the economy? I mean, there are so many different challenges being put out there. I mean, for New Zealand, what does this mean? How bad is the hit going to be to us here at home?
Yeah, well, you talk about those movements in stock markets, and I think it was around about 10% or so in terms of the likes of the S&P and Dow Jones of the fall over the course of those 2 days. And to be honest, there's probably more to come yet. But the reaction here on our markets has not been as severe. I think the latest trading is down about maybe 5% on where it was pre-tariff announcement. So suggestions there that maybe the direct impact on New Zealand is not as great as sort of markets are betting on some of those sort of international stuff, and particularly in the US, obviously. But the fact that, look, we've got a 10% tariff along with everyone else means that, yes, the likes of our wine exporters and our meat exporters are going to be hit with probably less demand, certainly on the wine side, I would have thought, coming out of America, as consumers, shift their consumption back towards US-produced wine, for example. And indeed just have less money to spend on everything because everything is costing more as well. And that's probably the biggest concern, right? It's not so much the direct effect on New Zealand, given that we've got off, as you say, at the lighter end of the scale, but it is how does it flow through into the world economy? And look, we've talked over the last probably 6 to 8 weeks about just the uncertainty that's been hanging over the world economy with policy that's been coming out of the US, both in terms of foreign policy around the Ukraine and conflict in the Middle East, but also increasingly in terms of the tariffs on again, off again for the likes of Canada and Mexico, and then obviously the big hit that we've seen last week. And markets are still looking at that and going, okay, we've seen news today that 50 countries, I think, are lining up to try and negotiate a better deal with the US than what's initially been announced. So again, how long do those tariffs sit around at what has been announced? New Zealand apparently is not in that queue of people trying to talk to Trump at the moment. But equally, we have also said, of course, that we're not going to, put on retaliatory tariffs ourselves because we realise that if it's hurting anyone, it's only going to be hurting us. So there's a whole lot there going on. And look, the uncertainty is going to hang over things. We've seen interest rates tracking downwards internationally, particularly look at sort of US 10-year bond rates. I think have dropped back by about 30 basis points, and they had been weakening anyway. So again, that risk of US recession really hanging over it. And therefore hanging over both the global economy and ultimately sort of New Zealand's growth prospects as well. I think we've seen our own 10-year government bond rates pull back by maybe 15 to 20 basis points as well. So just expectations there of weaker growth coming. And of course, the implications often around weaker growth are lower short-term interest rates as well. That's not clear for the US given the inflationary sort of concerns and risks that tariffs are putting in place. It's not even clear for New Zealand, to be fair, at this stage, given that we just don't know how much more sort of imported and tradable inflation there is to be going around the system and hanging over, sort of adding to our inflationary risks that were already there later this year anyway. On the other side of the equation, if you've got weaker global demand, possibly weaker export prices, that sort of contribution of the export sector to our recovery through the course of 2025 and into 2026 may not be as sort of large as we'd previously been hoping either. So maybe that takes a bit of heat out of demand pressures and a bit of heat out of inflation. So it's sort of mixed messages on the interest rate side at this stage. And I think it's be a case of just sort of seeing how things unfold both here and globally in terms of trying to understand where those interest rates go. But at the moment, financial markets do seem to be betting on the Reserve Bank perhaps cutting by more than they might have been prior to Liberation Day and those tariffs being announced.
I mean, the markets always want to sort of see the rate slash, though. So I think there is a little bit of wait and see. But at the same time, I mean, we've been talking for the last couple of months since Trump became president again that we shouldn't jump at every different shadow. But like this is a pretty big event, that this is a bit of a fundamental shift. And I think I hate to use the word unprecedented again, but like we haven't seen something like this in such a long time. The tariff rates that are now coming through from the US are on average the highest since something like 1909. Like you're going back pre First World War now to get to this sort of level of tariff and trade protectionism. The likes of the US, some of the economists and forecasters over there are now suggesting that chances of a recession in the US economy this year have increased to something like 60%. And this is all man-made. This is deliberate policy choices. You look back to COVID, the GFC, like none of those were things where someone deliberately said, you know what, economy, go get wrecked for a bit. This is sort of, a bit more direct, and it feels geez, just really challenging to think about how to make a way through. And it's interesting, you talk about these 50 countries that are apparently talking with the US. I still think there's a big question over will Trump want to shift? I mean, he's made a pretty strong view that the tariffs won't be coming off. Maybe if you've got the higher above 10% tariff that you can come down, but you only come down to a floor of 10% rather than getting rid of them. More importantly, the Trump administration seems to have a view that if you have a trade deficit, that's basically the equivalent to a tariff. And well, it's not quite true, but it becomes important in terms of the calculations. You see some of the countries that have now come out and said, look, we're quite keen to negotiate on tariffs. How about if we drop our tariffs back to zero? Based on the US's way of calculating reciprocal tariffs, what that's actually going to do is virtually nothing. If there's still a trade deficit that that country has with the US, then presumably those tariffs remain. I mean, all of this becomes sort of very confusing and a little bit frightening in terms of, I mean, this is a big economic shift. I don't know if we've seen not only the full market reaction, but if we've fully sort of incorporated what this means for the global economy. You've been talking a little bit about what those sort of broader global implications are. In the first instance, this is a supply shock that's hitting particularly the US market. But as you see more retaliation come out, you do start to worry about those global price rises that come through. At the same time, for New Zealand, as a small exporter at the bottom of the South Pacific, we're worried a little bit about, well, how much are we going to be able to trade? Are people going to be out there buying our stuff? And so there's a demand element to all of this. I mean, what are we considering there when it comes to the global market? I mean, just how worried should we be about trading activity and conditions? Can we sort of isolate, or will the US isolate themselves, or will there be much wider, bigger flow and effects?
Well, I think the initial sort of way that it pans out across markets is it is a big effect that really can't be avoided in the first instance because businesses, countries have set themselves up in terms of the way they trade, the way they interact with each other. You can't just change that overnight. From America's perspective, yeah, Trump wants to bring a whole lot more manufacturing back to the US, but it's not the sort of thing that you can click your fingers and suddenly those factories are back there and producing what you want at the price you want. And in some cases, they just can't produce. I read an interesting comment the other day where Madagascar's been slapped with, some fairly big tariffs because they have a big trade surplus with the US, or the US has the deficit. Why is that? Because they make a whole lot of vanilla, and it's not like they're going to be going and growing vanilla in the US. I don't think they have the climate for it particularly. So there's a whole lot of stuff there that it just does not change immediately, if in some cases at all. I think if you were to look forward 5 years, just let's think along that timeline, and the US is still taking a very insular, inward-looking protectionist policy, then you do get other trading blocs or partnerships, or however you want to phrase it, opening up around that. And the US sort of does become more isolated, and countries learn to, I guess, more trade amongst each other and get around that somehow. It's a second best outcome, don't get me wrong, but there will be a response over time. But in the near term, I think we are looking at a situation where global growth through the rest of 2025 and into 2026 is under real pressure because businesses, companies cannot respond immediately to the changes that have been imposed on them. And ultimately, there is less demand across the board from consumers, from businesses in terms of investing and that sort of thing as well. So I'm pretty pessimistic at the moment, pretty unsure just about how that global economy comes through. looks negative for New Zealand. And at the moment, that's what financial markets seem to be betting on as well, in terms of some of the other indicators. We've talked a little bit about interest rates, but also we've seen the New Zealand dollar down now to its lowest level since the global financial crisis. And that reflects, I think there's essentially two things in there. One is that international markets are betting on New Zealand to struggle more in a less export friendly environment. And secondly, of course, when there's a lot of risk out there and a lot of concern around the global economy, New Zealand falls out of favour and they look for sort of safe haven options. And so we've seen strength partly in the US dollar, but we're seeing it across the board in some of those other currencies like the yen, the euro, and the pound as well. So, yeah, pretty significant amount of pressure on New Zealand overall.
The hard thing, right, is that we're only a couple of days into this. We still don't know the full outcomes and implications. It was only over the weekend on Saturday, I think, New Zealand time, that China announced it would implement 34% retaliatory tariffs on the US itself. The EU has announced a small package, but that was more in response to the original, some of the original tariffs that were levied on them. Of course, they've got to be thinking about a bigger set as well. Some countries are keen to, go in and negotiate if that's possible. From a business perspective, at the moment, I wouldn't be making any particularly strong views in terms of investing here, there, or otherwise. I'd be sitting on my hands and just waiting it out to try and get a bit more of a view. All of that sort of uncertainty breeds a lot of challenge into the economy at a position and a time when really we were hoping that you'd get a bit more economic momentum this year. You'd be getting away from those sort of pricing worries. In fact, now the opposite is true. You've got greater pricing worries coming through, higher cost challenges, and just weaker growth overall. I mean, this really does seem to be a bit of an own goal for the economy, which is surprising but really challenging for everyone to try and piece through. We are only in those early stages. I don't think we can make any particularly strong definitive calls, but we are starting to look at our economic models and try and understand what this does mean. A lot of different moving parts, a lot of people questioning, will this stick around? Will it change? Will it adjust as we move through the next few days? And we'll continue to assess all of that, including the market reaction and what it means for New Zealand and our exporters, on one of the future editions of Econ Talks.